Hello, everybody, and welcome to this edition of Hardman Talks. I'm Keith Hiscock, the CEO of Hardman Co, and I'm joined today by James Wood from Winterflood Securities. Winterflood has worked with Hardman to publish a note on the definitive analysis of liquidity in the London market. This was entitled "Liquidity Shrinking When It's Most Needed," and that was published a couple of weeks back. We're here to talk about that note a little bit, but we're also here to help retail investors and company management understand how Winterflood's part of the market works. So very pleased, James, to have you here today.
My pleasure.
So let's get started. If you could briefly outline what Winterflood Securities does, because I guess it's a name outside the professional circles that not many people have heard of.
Well, we are one of the largest market makers in the London market. So that basically means we make two-way prices on virtually every stock that's listed on the London Stock Exchange. We also provide access to European and American stocks for retail brokers as well. But predominantly, we make a two-way price from everything from the FTSE 100 right down through AIM and Aquis. And that's a responsibility that the market makers have, is to make a two-way price throughout the trading day.
Thank you for that. So the message from the note that we published on liquidity was that it had fallen across the board, but it also made the point that retail is increasingly important to liquidity. How do you see that in your business?
It's of paramount importance to us because we make two-way prices, so we need liquidity, and you need buyers and sellers. Unfortunately, what tends to happen in bear markets or bull markets is you get too much of one over the other, and that's what moves share prices up or down. So in an ideal world, we want to provide a sort of an equilibrium between the two and provide a service where we buy some 1 minute and sell some the next. Of course, it doesn't always work like that, but that's what we provide.
Thanks. Okay, so now let's turn to dealing I'll do this from a retail investor's point of view. So when I place an order through my broker, which typically these days is online, what happens? I get this message that comes back that says I can deal at whatever. How does that work?
So market makers provide a two-way price, and predominantly if it's online, it's through what's called the RSP system, which stands for Retail Service Provider. And that's a platform which all the retail brokers plug into, all the member firms in the London Exchange plug into, and it provides an instantaneous two-way price, which is made by all the market makers, and it instantaneously picks out the very best bid price or the cheapest offer price for the retail investor to deal at. So you won't know which market maker is providing that price, but it will nonetheless flash it back in the blink of an eye to you. And there's a number of advantages for that, especially when you're dealing in set stocks and the FTSE 100 stocks, because normally those prices are accessed through an order book, which is basically a very large list of thousands and thousands of orders at any one given moment in time. And the RSP actually summarizes that into hopefully a better quote, a tighter price than the bid and the offer on the market screens, and allows those retail investors to hold the price for 20 seconds while they make up their mind whether they want to deal on that price. It also allows them for various settlement days. You can deal, up to T10 or even T20 in advance. It's extremely low cost, especially for the platforms. It's free to access the RSP, and that allows the big platforms to offer very cheap share dealing for the members of the general public. So, the reason why they offer you £10 a share dealing is because the cost of settling that with us market makers is basically free, and it can be much more expensive than that dealing directly with the exchange on the SETS system, which is the automated trading board. And in addition to that, you get usually, I think 94% of the time, you get a small improvement on the price. Sometimes it's a big improvement. So you're dealing in effectively for free with a depth of liquidity that you can see, for an extended settlement should you want to, in different currencies should you want to, and over a very, very wide range of stocks across the London market.
So what are the requirements on a retail service provider? Do you have to trade in every stock in the market? Do you have to always make a two-way price? Are there rules around the spread that you put into the system? Have you got to make a price in a minimum size? What are the rules around that?
No, on the screen itself, on the price that the general public can see, there are rules and regulations as to what a market maker can do. Now, a market maker can choose which stocks he wants to make a market in. If he's a market maker as a registered entity with the London Stock Exchange, you can decide to enter an RSP price, even if you're not a market maker in that particular stock. If you are a market maker, which is somewhat misleading, because you sort of, we often wonder, because Winterflood makes a price in everything except for Close Brothers, who are our parent company. So we don't make a market in Close Brothers shares, but we do in pretty much everything else. And occasionally you'll see a market maker that is not displaying a market maker price on what we call the yellow strip, but they do suddenly appear on the RSP. And that might be because they're working in order for an institutional client, which is frustrating to the market makers that make a price all day, every day of the year, sort of thing. But it is up to them. And on the RSP, it's very, very flexible. So we might have a completely different price within the spread because we are working in order for somebody very discreetly. And so we might be bidding in the middle of the quote, for example, where we might not be, we might be trying to do that very discreetly. So we don't want to move the market on behalf of our clients, and it's all confidential. But that's the access that the RSP can give you. You can often trade at a very, very advantageous price within the quote.
So is there, in practice, is there a maximum amount I can deal in for this auto execution? And does that vary by stock? Does that vary by what the market conditions are?
It does, because it's a market maker is effectively a trader. So if he buys 10,000 shares in something, he may then immediately want to offer those shares out and try and make a small turn for his troubles. So if he's just bought 10,000 shares at £1, and the spread on the screen is £1 to 103, he might offer those shares at 102 just to make a quick 2p in an ideal world. And that will therefore dictate what price and what size he's offering those shares that he's just bought at, and vice versa. So it's constantly changing, and it's a very, very fluid market. Now, some stocks, market makers via the RSP might just say, look, on a FTSE 100 share that's traded millions of shares a day, they might decide to, we'll always improve on the spread by 10% of whatever the spread is. So if there's a penny spread, they might say we're going to be 0.1p better bid and 0.1p cheaper offered all day long in that stock, and we'll be competitive on that front. But it's completely up to the market maker to decide, and each individual market maker at each individual firm, what price and what price improvement he gives in any given stock, and what size he makes that price in as well. And it might be that we're bidding for 100,000 shares of something, but only offering 5 because we've got a buyer who's desperately trying to pick up stock, and he's using us to just hoover up stock through the day, and we might warehouse that overnight, or we might book it out a large block to him through the day. We do a lot of that on behalf of clients. We sort of act as a conduit between the retail investors that are dealing in a share and institutions that maybe can't trade a big block, so they have to build up a position over time, and we'll do that on their behalf.
So in practice, if I put a smaller order in, do I get more market makers trying to compete for that business?
Yes, you might well do. And there are, I think there's sort of probably 10 fairly active market makers. There's plenty more. There's a lot of bigger companies that only will look after stocks that they're perhaps the corporate broker to. But Winterflood, we're not corporate broker, other than we've got an investment trust team that acts as corporate broker. But so we're agnostic. We just want to trade every share in the London market. So for us, we might have 3 different levels of pricing, and that's up to each individual stockbroker that we have an account with. We bespoke a system that's effectively gives them what they want. So some platforms might want a basic tier 1 price for let's call it, where the size might be quite small, but the prices are really competitive. And then they might want, in addition to that, a tier 2 and a tier 3 price, where the price and the size that we offer might be a wider price, but in much bigger size. That obviously entails us taking more risk, but some brokers want that, and we're happy to provide it should they wish.
And does the number of market makers vary by sector, for example?
Very much so. We often see suddenly something becomes in vogue, and it might be oil and gas stocks suddenly becoming to the fore over the Russian crisis in Ukraine. And we'll see a lot of our competitor market makers add themselves to become market makers in oil and gas stocks, for example, because they're seeing a lot of activity in the sector. And then they can deregister again, weeks or months later if they're not doing any business. So, but we tend to make prices in everything all the time.
So let's say I want to buy a reasonable lump of a stock as a retail investor, and I put in an order for 25,000 that gets instantly executed, but that was the maximum I seem to be able to do at the moment. The moment that's completed, can I put in another order for £25,000?
You can. It's somewhat frowned upon. There is a sort of a market etiquette which has been lost in the ether a little bit with the advent of electronic trading. So in the old days, you'd ring your stockbroker, and your stockbroker would ring the market maker, and he'd say, what's the price in 25 or what's the price in 50? And you'd get a price in those amounts of shares. If you were to go and buy the 25, because that's all we were prepared to sell, and then your broker put the phone down and rang one of our competitors, he would only do that in the full knowledge to us that that was what he was going to do, and he would declare that before he did it. Online, it's very difficult to sort of to monitor that, and of course the investor doesn't know which market maker he's traded with, because it's all kind of anonymous. We know that the broker that we've just sold the 25,000 shares to, because we've seen the quote come in, we've paid the price, we've dealt. If suddenly you get another thing flash up from that very same broker a nanosecond later that he's doing it again, it is somewhat frowned upon and can lead to the RSP being switched off to that broker, which is not very fair to every other client of that broker who also might want to be trading. So it is somewhat frowned upon, I'm afraid, but you're much better to actually call your broker and say, this is what I want to do, and they can do it the old-fashioned way and call a market maker and deal over the phone.
So let's say I want to leave a limit order instead. I want to buy quite a bit. Is that to my advantage? Is that going to help you to get me a better price?
In all likelihood, it is, because we can go and bid people on your behalf that you wouldn't be able to bid. So if you were trying to buy, say, 100,000 shares in something, and your broker rang our trader, firstly, he can tweak his RSP to start bidding on your behalf, and we can just slowly build up a position for you. And you can set the price. You can set the price parameters as to what level you want to buy those shares at, and we'll just keep buying them until we've completed your order, and then we book it out to you. So it can be very advantageous for you to do that, because we can adjust the prices that we're bidding for stock at. We also have a sales trading desk that can go and bid larger holders for big blocks of stock that we can get for you within your price parameters, perhaps. So it's definitely worth leaving a limit order on, because if you just start dealing directly, you might end up pushing the price up and not getting very many shares.
And if I leave a limit order with you, not fill and kill, if I leave a limit order with you and you're not able to complete it in full, do I still get what you've bought on my behalf?
Yes, yeah, absolutely. And the rules and regulations are very, very tight as to how we look after a client, and it's absolutely paramount. So, and there are rules also as to, if you're a commission-paying client, we can only charge a commission. We can't take a turn, which is obviously what a lot of institutions do with us when they're interacting orders against retail flow.
I think you've answered this question, but I'll ask it because I'm sure there were some who are looking for this. Can I find out who I've dealt with? I'm not sure how that's going to help me, but I know some people would like to know that.
Yeah, technically you can. You could ring your broker and say, who did I buy those But the broker might be slightly alarmed as you're asking, because he wouldn't want there to be any fear of market abuse going on, that I know I bought those off Winterflood, I'm now going to go and trade away, call it, with another market maker, and because that could be tantamount to market abuse and trying to move the price up. So it's technically it's possible to ask, but it would be somewhat frowned upon, I would have thought.
James, thank you for your time. That's really illuminating a subject which I suspect many retail investors and company managements don't understand. So that's brilliant. You'll find more detail on liquidity in our note on our website. As always, thank you for watching. Please don't forget to like this video and join the conversation wherever you're watching. And we'll see you next time. Thank you very much.